Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3, and just before the 790 KBC News Blitz at 5. And tonight, stay tuned at 6 for Winning with WINANS. We'll have extended market coverage tonight. Right now, it's Mottek On Money for you, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all of your favorite podcast platforms. Stocks kicking off the week with another big sell-off. The Dow down nearly 1,000 points at the closing bell, with Wall Street taking in the latest debate on whether an early departure of the Fed Chairman Jerome Powell might happen and what that might look like for the financial markets. This after President Trump blasted the Fed chairman on social media again today, calling him a major loser and warning that the economy could slow down unless short-term interest rates are lowered immediately. Preemptive cuts in interest rates are being called for by many. That's quoting President Trump on Truth Social today. The market reaction was pretty sharp. The Dow closing down 972 points, settling at 38,170. This is the fourth consecutive daily loss for the Dow. The S&P 500 closing lower by 124 points, settling at 5,158. And the NASDAQ plunging more than 400 points, down 415 at 15,871. It was the fourth consecutive daily loss for the tech-heavy NASDAQ. The price of gold, meanwhile, shot higher to a record high above $3,400 an ounce for the first time. Yep, you heard me. Above $3,400 an ounce right now, hovering at around $3,446 and change, up another $21 in after-hours trading. This has the dollar at its lowest point in about 3 years today against major currencies. Bitcoin also rallied today above 87,000. The yield on the 10-year note is back up to 4.41%. Shares of United Health back in the spotlight today, experiencing its worst two-day drop since 1998. We saw United Health shares down another nearly $30 today at $4.25 and change. This after a big drop on Thursday before the three-day holiday weekend. Markets were closed on Friday for Good Friday ahead of the Passover/Easter holiday weekend. United Health Group, of course, a major health insurance company, still reeling from the murder last December. One of its top executives, Brian Thompson, who led its insurance division. And it looks like United Health out with earnings now, reporting first quarter net income of $6.29 billion compared with a $1.41 billion loss in the same period a year earlier. The company cited increased utilization in its Medicare Advantage segment and changes in member profile as key pressures on performance. Chief Executive Officer Andrew Whitty said the quarter developed in seemingly disparate ways, with growth across business lines and expanded services offset by challenges that he described as unusual and unacceptable. Rents have skyrocketed here in Southern California since the LA firestorms decimated the Pacific Palisades and Altadena back in January. We'll get an update on that from economist Dr. SELMA HEPP, who will be joining me live later this hour. We'll also be joined this hour by Kevin HARBOUR, the president of BizFed Institute, the LA Business Federation Institute, who is organizing the BizFed Institute's Build Up LA Fire Recovery Summit, set for next week. But first, on your money, the markets, the economy, gold, crypto, the whole works. Now, top-ranked money manager Ken WINANS live with us now on the line, president and chief investment officer at WINANS Investments, which you can find at winansinvestments.com. Ken WINANS, also a market historian, author of numerous books. His latest, Investment Atlas 3, Creating Wealth Using Historical Trends, also Forbes magazine contributor. He's also got his crypto credentials, too, and most importantly, he's host of Winning with WINANS, heard every Monday night at 6 p.m. on your favorite station, 790 KBC. Ken WINANS, thank you very much for taking the call here this afternoon.
My pleasure, Frank. And, you know, it's unfortunate we're coming off of what was a wonderful holiday with no reprieve on certainly, you know, a lot of the volatility we've had lately. But I want to make a couple of comments that I think are important. That, number one, earnings season is still very, very early, and I know that a lot of people are still in a state of shock to see a very large Dow industrial average component, plus just a huge foundation part of the healthcare sector literally having its stock blow up in a manner that we haven't really seen since 2008, 2009, being United Healthcare. And I think that alone has a lot of people concerned about what the rest of earnings season is going to look like. But, you know, it's funny, the number one thing that I've been getting a lot of calls on today is just the banter back and forth between the Federal Reserve and the presidency. And I've had to remind several people that there's been not a lot of love lost through the years between the Federal Reserve and the president and the Congress. And in fact, when the Federal Reserve was put in place back in 1914, the antagonism started even way back then. But in recent history, or relatively recent history, I would caution everybody to go and look at the first 20 months of Ronald Reagan's first term. And he and Paul Volcker, the Fed chairman of that time, were not exactly buddies because rates were still very, very high back then. And Reagan was very upset that rates were not being dropped. So this is a very odd redo of history.
On the air live with Ken WINANS, and thanks for sharing that, Ken. And yeah, we were around back in those days, and certainly the interest rates for the first term of President Reagan were very high, coming off of Jimmy Carter's administration, where inflation was running hot and extraordinary measures were being taken back in those days to turn inflation around. And interesting, fast forward to the present, President Trump on Truth Social today, as he continues to blast the current Fed chairman, says inflation's low and basically insisting on lower short-term rates. Rather public display here. Of course, we didn't have social media back in 1981, 82 when President Reagan took office. But how do you expect this to play out? And the market seems to be very sensitive to this war of words between the White House and the Fed at this point.
Well, the referee between these two is going to have to be the Treasury Secretary. And I know that right now he is down trying to work on trade deals and other things like that. But that's really the third prong that is going to get this to stabilize. But Frank, it's a very volatile time. There's a lot of moving pieces. I mean, it's amazing just as I talk to people who are fixated on the news right now. And you have to remember at the end of the day, the stock market can be at times very, very emotional about geopolitical things. But what I'm concerned with is that a lot of people are talking themselves into the old phrase, the only thing you have to fear is fear itself, a very famous phrase from Franklin Roosevelt. And at the end of the day, I still am not buying into this being what we would call as a normal bear market. And one of the big reasons I say that is that when I look at the movement of corporate bond prices, especially intermediate and shorter term, they're stable. They've moved a little bit, but corporate debt has been rather stable. If you're talking about a full-blown bear market, you're going to look at corporate bonds beginning to crater as well. And I think it's still early to see where this is going to play out, but as I said, it's very early in earnings season, and I'm actually a bit of an optimist. Maybe it's just me coming off of a wonderful holiday, but I actually think we're going to have some earnings surprises to the upside. And what I mean by that is, I know today President Trump met with some of the big CEOs of retailers. And so everybody is assuming that retail stocks are just getting killed, that they're going to be killed in tariffs and all that. But that is just not the case. When you look at year-to-date performance, Costco is actually up 4% on the year. TJ Maxx is up 3%. I look at one of my favorite groups, the auto parts retailers. O'Reilly Automotive is up 16% on the year. AutoZone is up 12%. If the tariffs were going to be that hard on retailers, all those stocks would be well below the performance of tech stocks right now. So there are still some very mixed messages out there between what the market's telling us and what is coming out of Washington. And as I said, too soon to tell in which direction it's going to go, but I think it's going to begin to stabilize.
Certainly the volatility index getting another spike today, up 14%, and gold in all this popping to a record high above $3,400 an ounce for the first time. Gold, by the way, up about 30% for the year. Give us your reaction to that big news here.
Well, I'll give you something even more amazing than that, Mr. Mottek, that gold since December of 2023 is up 65%, just to give you an idea. So you can't blame the gold run on just fears of inflation right now. It's been on a tear for quite a while. But the entire metal complex, and what I mean by that is mainly the commodity, the metals that trade commodity futures, which to me the big ones are copper, gold, and silver, the most active contracts. All of them are having a great year. I know that you and I have been talking about these favorably for a good part of a year, and they've been just amazing performers. But I also think, too, we have to also remember that gold, silver, and copper are still also used in industry. And, when you are going to talk about inflationary pressures, you need a lot of gold and silver when you make a lot of these new AI chips. that could cause the price to go up in certain areas of technology, certainly our iPhone. Or I have an iPhone, there's a lot of silver in that as well. So again, there's going to be cross currents that we're going to have to move through as we really get through the rest of this earnings season and head toward the summertime. But I do understand why it unnerves people, and certainly, for a lot of people, I mean, certainly I'm very empathetic about market volatility. Been in this game a long time. I've learned the hard way that 23% of the time the stock market has a bad year. So we just have to kind of get our way through it and try to get ourselves positioned when things finally do recover.
Gold having its biggest jump since April of 2020 during the time of COVID and when the entire global economy was shut down. Extraordinary times there. Certainly we seem to see COVID-level uncertainty and volatility. Fast forward to 2025 here, given the tariff news and also the U.S. Locking horns with China on trade. We're watching the latest headlines there as well, with the Chinese imposing additional tariffs and so forth, and we got this 90-day pause on some of the tariffs President Trump was talking about, so that's still up in the air here as well. Uncertainty, we keep hearing that word all the time, and also the word supply chain starts popping up again. We haven't heard that as often as we've seen since the COVID days, Ken. So when's the dust going to settle, and what do you see ahead for this market?
Well, okay, let's be the glass half empty or half full here. We dealt with one of the only great benefits that came out of COVID was that we actually started to readjust our logistical supply chains even back then. For everybody who will remember, all those freighters and tankers that were out in Long Beach Harbor that couldn't be unloaded. There were a lot of adjustments that had to be made then, and I think companies have carried that forward. That's again another reason why I think the retailers are actually weathering the storm very well. But Frank, a couple of themes that I think people in the audience certainly should take a note on. All the talk on tariffs, I would be a lot more concerned about it if it also include discussions about tariffs on service exports. That doesn't seem to be in the conversation at all. It's all about products. So when people are looking at where to readjust their portfolios, I've been talking about financials for quite a while. I think you can find the financial industry overall or financial stocks overall could be largely unscathed when this thing finally does rebound. And, just another example, we talk about service stocks. I look at some interesting names. Republic Services, which is one of the waste companies, its stock's up 19% on the year. They're not going to be affected by tariffs. Waste Connection, same way. I look at a company like Cintas, the uniform company. It's actually up 10% on the year. So I think, again, if people are wondering, where can I go where tariffs are just not even going to be part of the equation, I think it's the service stocks. And I think, again, just let the dust settle. But instead of trying to catch a falling knife with some of the real beaten up type stocks, I would really be looking at finding who have been the stable parts of the storm and lean your portfolios in that direction.
All right, one ray of sunshine today. Ken Winans, crypto, Bitcoin rallying above 87,000. It's had a wild ride since hitting a record high earlier this year, and certainly very, very volatile so far here in 2025. What are your thoughts about what's happening in the crypto space, specifically Bitcoin back above 87,000, rallying today in the face of all this news?
Well, definitely Bitcoin is in what we would call a range-bound market. I don't necessarily think it's going to hit any new highs this year, but as you said, Frank, it came off of its lows, smacked right above its prevailing support points and moving averages. I was happy, and even Ethereum had a very nice, I dare say, I call it a dead cat bounce, but very clearly there's been some movement of money in that direction. But the part of the thing with crypto, being that it is largely an unregulated geopolitical phenomenon, I think it's still being tied to, will the central banks start adopting it in its reserves? And I do know that much of the talk has been that with people trying to decouple from the dollar, i.e. the dollar dropping, demand for other areas are going to pick up, whether it's other currencies like the euro or the yen. But I actually think crypto will be part of that conversation, whether it's at the central bank level or I dare say even at state level, when states are trying to shore up their reserves. I would not be surprised to see crypto in that argument. But again, I don't necessarily think we should all begin to think that downward volatility in crypto is over for the year. This is, 2025 is going to be the year known for excessive volatility, and it's going to be in all asset groups. Frank, one other quick thing to bring up. I'm still waiting to hear the news about real estate. In about another 3 to 4 days, we're going to get reports coming about March new home sales and new home prices. I know you mentioned earlier in your intro talking about how apartment buildings and apartment rentals have just gone through the roof. Well, it's going to be interesting to see where we are with housing, because a lot of the home builders are posting earnings over this week, and that will be some telltale signs about what's happening with the housing stock in California and the nation at large. So that's another key point there. If we find that housing's actually stabilizing, much of this other volatility might begin to subdue.
On the air live with top-ranked money manager Ken Winans. WinandsInvestments.com is where you can find him, and we'll be on the air again tonight at 6 for Winning with Winans here on 790 KBC. Before we let you off the hook here now, Ken Winans, let me ask you about Tesla, which is due to release its quarterly earnings report after the closing bell tomorrow. Tesla taking a hit today, down nearly 14 at 227 and change. The other Mag 7 names, NVIDIA, also moving lower to 96 and change. And the list goes on here. What about Tesla here getting so much attention for a variety of reasons? Where do you see Tesla go from here?
Tesla, as we know, Tesla ended up getting very hard hit today as well. It's one of those, it's one of those pet stocks with a lot of people. A handful of my clients have ordered me to literally restrict my independent decision making on some stocks, and Apple is one of them, and so is Tesla. So I mean, these are just emotionally driven names, and I've had people step in and buy Tesla on the dip. But I will just say this: a lot of Tesla's guidance, I really think, is going to be tied to the EV mandates that places like California are enacting. And if those places are still going to stay with those mandates, I think that we could find that Tesla's guidance past this year could actually be pretty promising. But that we'll find out when the numbers come out and you start reading the fine print. We'll find out where things are. But Frank, one other quick thing, guidance. I know a lot of people in my industry. We're number hounds. We love to get forward projections. But when you've got companies even like Value Line Surveys, which is a forecasting them, it's been around since the 1930s, and they're even beginning to say that they just don't have a good crystal ball on where older companies are going. That tells you that we're flying into a fog bank for the rest of the year on earnings guidance. So we're just going to have to just watch supply and demand of shares and who's buying them and when, and to see how this thing plays out. So again, a very murky year for 2025.
Bravo TV star Lala Kent holds nothing back on the Give Them Lala podcast.
It's very a lot.
You want the headline.
Here is my interview with Vicky Gunvalson. Who did the biggest number on you?
I'm not friends with Tamara anymore, which is fine.
Do you feel like you guys can repair?
No.
Stick to what you know.
Iconic.
Absolutely fantastic. It is like the Super Bowl every episode.
Give Them Lala.
Unhinged, but also amazing TV.
Get ready.
Follow and listen on your favorite platform.
All right. Any other specific places where you are putting money now and or taking it off the table?
The only thing, and I know I brought it up on several other shows, but I think you do have to take a good hard look at the utilities. And by the way, I'm not talking about California utilities because of the fires and the other issues. They have their own things. But I'm just astounded how well the utility sector itself is actually very positive on the year. And again, another warning that I would tell people. When you talk about a serious recession, you talk about an economic slowdown, you expect power usage to be part of that group. You know what? I think that we should watch the utilities through this earnings season and see what their power usage projections are going forward. And, the only ETF I'll throw out there for people who like ETFs, if you want one, go look at XLU, which is the State Street Utility Spider. It trades at about $76 a share. It's down a little bit on the month, but it's actually even on the year, and it has a nice dividend. If you're looking for some place to park some money to let the fog clear, that might not be a bad place. But again, let's just wait for earnings to come out, because if the utilities start coming out with bad numbers, you might find that shifts very quickly.
on there live with Ken Winans. Ken, I wish we had more time here, but fortunately we will have more time in the 6 o'clock hour tonight when we speak on Winning with Winans at 6 p.m. right here on 790 KABC. That is top-ranked money manager Ken Winans, President and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, also author of numerous books, including his latest, Investment Atlas 3, Creating Wealth Using Historical Trends, Forbes magazine contributor. Also, crypto expert as well, so we look forward to continuing our conversation. Most importantly, host of Winning with Winans, heard every Monday evening at 6, right here on 790 KBC. Ken, thank you very much for coming to the line now, and look forward to speaking with you again at 6 o'clock this evening.
Sounds good, Frank. Yeah, we have a lot to cover tonight. We'll talk to you later.
Yep. Thank you very much. And out to the freeways we go right now here on 790 KBC. .790 KBC welcomes, want to take a guess? The awesome Herb Alpert and the Tijuana Brass coming to the Dolby Theater November 15th. Tickets are on sale this Friday at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. Get a pair of tickets to the show if you are caller number 9. Call right now, 1-888-790-5222. Tickets furnished by Live Nation. Rough start to the new week on Wall Street coming off the 3-day holiday weekend. The Dow tumbling nearly 1,000 points at the closing bell today, settling at 38,170. The S&P 500 down 124 at 5,158. And the NASDAQ sliding more than 400 points, down 415 at 15,871. The yield on the 10-year note, which impacts the fixed-rate mortgage rates out there, at 4.41%. Gold, the big story today, blowing past 3,400 an ounce for the first time, hitting an all-time high. Right now hovering at around $3,446.30 an ounce, up about $21, another $21 in after-hours trading. We see silver also moving higher today, up 16 cents at $32.68 an ounce. Gold, by the way, seeing its biggest one-day jump since April of 2020 during the pandemic days when the global economy was shut down. Gold up about 30% this year. Taking a look at Bitcoin, it too got a pop. It hit as high as 88,500 or so. Right now down about 400, back to 87,022. Ethereum up 1 to 1,576. Doge at 16 cents. NVIDIA down more than 4 to 96 and change. Tesla down nearly 14 at 227.50. And United Health sliding again after that big drop last Thursday, down nearly $29 to $425.33. And now the latest news on 790 KBC. Mottek On Money continues here, 790 KBC. The slow, painful recovery continues here in the Los Angeles area from the devastating firestorms we experienced back in January. I'll be talking about how rents have skyrocketed since those firestorms decimated the Palisades and Altadena. We'll be getting an update on that coming up here shortly from economist Dr. SELMA HEPP, chief economist at Cotality, formerly known as CoreLogic. But right now, let's bring in Kevin Harbour, the president of the LA BizFed Institute, who is organizing the BizFed Institute's Build Up LA Fire Recovery Summit set for next week. Kevin Harbour, thank you very much for taking the call here this afternoon.
Frank, it's a pleasure to join you today, and I look forward to our discussion.
Wonderful. Well, thank you very much for taking the call here on this big issue of the Build Up LA series, LA Fire Recovery Summit happening next week. Tell us about the BizFed Institute and its role in this enormous recovery effort that's currently underway.
Well, thanks for the opportunity, Frank. BizFed Institute equips decision makers with comprehensive expertise and resources that spark change to build and sustain strong communities. And in this case, we're organizing the LA Recovery Summit to bring together business leaders, policymakers, emergency response experts, and first responders, environmental specialists, especially when it comes to the debris that you've heard all about, and also community advocates to address the widespread impacts of the Eden and Palisades wildfires that occurred in Los Angeles. So, one of the things that we like to really look at is wildfires are becoming more frequent and severe. And, this summit aims to foster collaboration between businesses and elected officials and, all the individuals that make decisions on helping us to rebuild in terms of permit pulling and insurance, and developing, actionable solutions for economic recovery. So when it comes to environmental restoration and long-term resilience, we're at the forefront by providing discussions that will focus on supporting businesses that have suffered financial losses, as well as individuals in terms of their homes. And then we're going to explore financial assistance programs, insurance challenges, and develop strategies for economic revitalization in fire-affected communities.
Wonderful. On the air live with Kevin Harbour, the president of the BizFed Institute. And it's great to connect with you here on the air. This is an important gathering that'll be happening next Tuesday, right? April 29th, right there in the heart of downtown L.A. at the ASU California Center. That's Arizona State University California Center, right? Tell us what people need to know about attending this and some of the details about this event.
Sure, Frank. First of all, I'd like to announce that our Mayor, Karen Bass, is going to give a keynote. She'll be our keynote speaker, and she's going to talk about the work that she's been doing for the last several months to pull everything together, which has been no easy task. We also have the Undersecretary for California Housing, Business, Consumer Services, and Homelessness, Tamika Moss. She's going to be our lunchtime speaker. Now, the interesting thing, and where the rubber meets the road, we're going to have a panel that is going to focus on structuring rebuild, insurance, and funding sources. And Angela Gibson Shaw, who is the board chair for LA County Business Federation, better known as BizFed, will be moderating that panel. And we'll have the Deputy Insurance Commissioner for California reports to Ricardo Julia Juarez. She's going to be there, and she's going to talk about what the state is doing in regards to helping things along and making sure that people make good choices. And then we're also going to have Quentin Strode, the CEO of Vermont Slauson Economic Development Corp., to talk about the financial angle, right? And pulling all that together will be Russell Johnson, the Director of Community Affairs for the Associated Builders and Contractors. So that's just going to be the first panel. Second panel will be focusing on infrastructure. And, no community can rebuild without infrastructure being in place. So what does that mean? That means, our broadband access. It means energy in terms of, Edison will be there, and they'll be talking about, preventative measures that they're going to take into place, and also what we can do to accelerate the process to get power and maintain it. We're going to have Shane Chapman, the Assistant General Manager of Operations for Metropolitan Water District, as well as Maria Ventura, Regional Public Affairs Manager for SoCal Gas. And then Scott Longhurst, the Senior External Affairs Manager for Crown Castle, is also going to be on board. And, between all of these dynamic individuals, and this, by the way, let me say that Jesus Roman, who is the Chief Regulatory and Legislative Counsel for Verizon, they're all going to talk about how to collaborate, how by working together and pooling resources and reaching consensus on priorities and how to go about things, and then documenting this process as they are able to improve on how things used to be, how this is going to help. Now, also rounding out the first panel is Elaine Tabor. She's also a BizFed Institute board member. She's a counsel with Hanson Bridget.
What's up, everyone? It's Trevor Sikkema here from the PFF NFL show, here to get you ready for the 2025 NFL Draft. We're dropping PFF podcast episodes 3 times a week with the rankings, sleepers, team fits, mock drafts, and more, powered by the same data used by all 32 NFL teams. If you want a deeper insight into this year's class and how it all shapes up on draft day, we've got you covered. Become a smarter draft fan right now on the PFF NFL podcast. The PFF NFL podcast, part of the Believe Network. Follow and listen on your favorite platform.
She's going to talk about the legal issues that, are involved in this. But, where the rubber really meets the road will be the breakout sessions. Danny Bakewell, who's the president of Bakewell Company and the executive editor of the LA Sentinel, he's a Altadena resident. And Bakewell Company has done a lot of great work in LA County, multiple 9-figure development deals. He lives there. Two of his kids lost homes, and they're going through the process now. Because it doesn't matter who you are when these kinds of things happen. When it hits you, everybody's on a level playing field. So he's going to give a very interesting perspective in our breakout session. It's going to be co-moderated by Allison McCracken. She represents a lot of the folks in the Palisades area, and she's been doing a lot of advocacy around trying to accelerate the process of, debris removal and permit pulling and helping guide people through the process of whether to rebuild their homes or sell their land. A lot of some people are in their 90s and they just don't want to go through that process. But most of the folks there, they want to rebuild. And so with, the elected officials and, state and county staff there and all the business people that are involved, they're going to help move things along. And we feel that by pulling these folks together, we're providing a public service to bring everybody, together in one room and to fix this. We got Eric Strom from Strom Richards Insurance Agency to talk about insurance. We have Dr. Darlene Green, she's Altadena City Council person, and Stephen Sachs, who's also a resident, president and CEO of Sustainable Communities Development Corp. He's going to talk about, all the financial ins and outs and some of the things that are going on, good, bad, and ugly, but they're to put a positive impact on what needs to be done to help folks, no matter what the area, share ideas, share experiences, and hopefully move the needle forward and the ball downfield.
Congratulations on assembling this important summit, and you certainly have our support here. That's the BizFed Institute Build Up LA Series LA Fire Recovery Summit, happening on Tuesday, April 29th from 9:30 a.m. to 2 p.m. at the ASU California Center. That's the Arizona State University California Center on Broadway in downtown Los Angeles. Kevin Harbour, the president of BizFed Institute, and by the way, their website is bizfedinstitute.org, bizfedinstitute.org. Thank you very much for taking the call live with us here this afternoon.
Hey, Frank, one last thing. Just want to give a big shout out to Arizona State University and Dulce Vasquez, the Director of Strategic Partnerships. They're providing the space and feeding everybody at their expense. And I just want to thank them and Bill Stevens from Employers Group giving a great poll to make sure everybody's ideas are heard and understood. Thanks for the time, Frank. Appreciate you.
Thank you very much for that important announcement today. Again, bizfedinstitute.org for more information about the LA Fire Recovery Summit, which he described so well. That is Kevin Harbour, the president of the BizFed Institute. Out to the freeways we go now on 790 KABC. Mottek On Money continues here, 790 KABC. What's up, you ask? Well, the answer here in L.A. is nothing but the rent. A lot of things up, but rent for sure. Rents have skyrocketed, as it turns out, since the L.A. firestorms in January. The area is devastated by the fire. Palisades and Altadena, especially hard hit. L.A. rents have increased dramatically. We now have the numbers in a latest report, and joining us live now is economist Dr. SELMA HEPP, chief economist at Cotality, formerly known as CoreLogic. Dr. HEPP, thank you very much for taking the call here this afternoon.
Hi, Frank. Thanks so much for having me.
Wonderful to have you with us. We certainly have heard anecdotally that rents have gone up dramatically, but now you've taken a really serious look at exactly how much rents have increased. Take it from the top and tell us about your latest report.
Yeah, according to the latest Cotality single-family rent index, we saw single-family rents in LA triple since the wildfires. So prior to the wildfires, the rents were growing at about 2% rate on a year-over-year basis, and now they've gone up to 7%. It's actually 7.2%, and most of it has been driven by higher tier rentals, which are up actually 9%. On a year-over-year basis. So this was the strongest increase we saw across metro areas in the U.S. and obviously a clear impact from the wildfires.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money here on 790 KBC. A dramatic increase in rents with L.A. leading the nation in rental price increases here. So take a look at what's happening here now. Wasn't there some sort of a restriction put in place following this disaster that the rents couldn't go up, more than 10%? And now it's we find out it was up about 9%, just below that 10% mark. Any other details you could tell us about that?
Yeah, so I don't know if this is the direct impact of the limitation put in place, but it is certainly interesting that it grew all the way up to that limit. So, yeah, I mean, unfortunately, we are also seeing this in terms of home prices as well. We've seen home prices in Los Angeles grow pretty strongly, even though we had pretty quiet beginning of the year for home sales activity nationally. In LA, it's been relatively stronger, and we also saw home price appreciation relatively stronger coming into this since the wildfires. So I definitely feel like there is an impact across the board, not just on rents, but also on home prices as well.
All right. Since you're one of us, you're right here in the Los Angeles area. What intelligence are you picking up about home prices, for example, in the Palisades? Been hearing anecdotally that prices there have skyrocketed. Even the empty lots have skyrocketed, and also pretty much the same situation there in Altadena in the San Gabriel Valley. What are you hearing about the home price situation in those areas?
Yeah, so the largest home price appreciation has been in areas that are comparable, character-wise to those areas that have been affected by the wildfires. So you saw also a lot of home price appreciation in Santa Monica, in the Laguna area, in Beverly Hills. All of these areas that are higher-priced markets, that's where we saw most of the appreciation. The other markets, not as much. I mean, even when you look at the rental market, the lower-tier rentals did not appreciate at the same pace as higher tier rentals. So it's not across the board. It really depends on the types of housing and the neighborhood.
And certainly the impact of all those homes lost, and including multifamily in some cases, and businesses, the economic impact of all this is just starting, and certainly with affordability and availability being big issues here to begin with. Now this disaster appears to be making this even worse. So what is the outlook here?
Well, yeah, I mean, Los Angeles, unfortunately, has been ranking as the least affordable market in the country, and will probably remain so for as long as we don't increase the number of new construction in the area. We do get a lot of new construction in Anaheim area, for example, in Orange County and other parts of California, Sacramento or even Ontario area, but not in Los Angeles. So as long as we don't as long as we keep the new construction subdued, I don't think that we're going to see improvements in affordability in Los Angeles.
Dr. Selma HEPP, Chief Economist at Cotality, formerly known as CoreLogic. Always great to speak with you. We look forward to your next update. Dr. HEPP, thank you very much for joining us live here this afternoon. Stay tuned now for the 790 KBC News Blitz, and then at 6, it'll be Winning with Winans. I'll be back on with Money Manager Ken Winans for a discussion on the market action today and what just happened and what's ahead. The Dow closing down nearly 1,000 points today. And I'll be back tomorrow at 4 with more here on Mottek On Money on 790 KBC.
Bravo TV star Lala Kent holds nothing back on the Give Them Lala podcast.
It's very a lot. You want the headline.
Here is my interview with Vicky Gunvalson. Who did the biggest number on you?
I'm not friends with Tamara anymore, which is fine.
Do you feel like you guys can repair?
No.
Stick to what you know.
Iconic.
Absolutely fantastic. It is like the Super Bowl every episode.
Give Them Lala.
Unhinged, but also amazing TV.
Get ready.
Follow and listen on your favorite platform.